So when it comes to finding entries, it very much comes down to what we spoke about towards the end of the previous video. We have our setup formulated on the higher timeframes, and now we want to find the best place to buy or sell from. Following on with this USD CAD buy idea that we spoke about, we can see that we do have those two intertwining zones, and this makes it a little bit tricky to know the best place to buy. If, however, we do scale to the low time frames, as we did in the previous video, we can then refine the zones, and we could refine this area to potentially this candle here, and we could refine this area to this candle here. The big consideration when choosing the right zone to enter from is there any imbalance? Is the price efficient? And has the market efficiently traded through these zones? Well, we can see here, the market came down from this zone. We pushed up. We did not retest. We formed a new demand. Then we pushed up and we retested that one. But this zone was left untested. Okay, so we have an imbalanced zone down here. So for me, this is going to be the high probability area to buy from. That doesn't mean we should write this zone off. If the market does come in and form that bullish reversal confirmation that we like to see, we certainly could begin looking for some buys from there. But the high probability ideas are going to come from a trade into this zone. Now, what does that mean? Well, obviously, that's going to give us much more confidence when taking the trade, and we're probably going to get a better entry because we can obviously, if we say entry here, risk reward on this trade is going to be around, 13 pips on a stop loss. Whereas if we entered here, we'd either have to, risk putting our stop in the imbalance, or we'd have to stretch the stop so far that the risk reward would just be terrible. So finding an entry is all about actually getting the best risk reward, best stop loss positioning, and the best maximum profit out of your trade if it works your way. So now that we have the clear zones to buy from, we can actually consider the entry types. We spoke about entry types in the first chapter. We have two different entry types: confirmation trades and risk entries. Confirmation trades wait for that reversal, as we spoke about, where we are looking for a movement like this. And then when the market begins to push away, we look to buy in around this area to follow the confirmation. And the risk entries are simply a tap straight in and a go. Now, risk entries are never actually unconfirmed, so to speak, because we are always using structure confirmation. If we were to use a risk entry on this zone, we'd still have the structure confirmation of this trend, and we would be using this demand zone to enter. So really, it is confirmed, but obviously it's riskier because there's always the chance the market could just slam through. If we do wait for the lower time frame confirmation, which is basically the same thing we want to see here, but very scaled in on the 5 minute, 15 minute, and so on, we then get obviously a more confirmed entry because it shows us the low time frame structure is in tune with what we're looking for on the high time frames. When you're in a situation like this where you have multiple zones, if you are going to use a risk entry, you should always use it on the low zone, the extreme zone, which is the furthest zone at the bottom of the movement, or in a selling opportunity at the top of the movement. The extreme zone is basically the level that, if invalidated, you don't want to be in the trade. So if you want to use risk entries, the risk entries are always going to be best on the extreme zones because they've got less chance of being taken out. And if a stop loss is taken out on an extreme zone, basically the trade's invalidated and you don't want to be in it anyway. So let's say then we place our risk entry on here and we want to run this up. We're going to talk about targets in the next video, so we don't need to worry about that too much. But that right there is a one solid entry, okay? We found the zone, we refined it down, and now we found a good place to actually buy from, being this top of this hourly zone with a risk entry. Now we could also go ahead and wait for confirmations, and because this is an hourly zone, we would be looking towards the 15 and 5 minute and 10 minutes for the confirmations to occur. So what we can now do is allow the market to play out. And when it starts to approach this zone, we can first of all, we can see how the risk entry plays out. But second of all, we can actually see how the low time frames are going to treat us in terms of a confirmation entry. Well, as we can see there, an 8.78R move instantly completed by a risk entry, using that in the extreme zone. But let's actually scale down to the start of that movement there and see if we can find a nice confirmation entry as well. Obviously, when you're trading live, the market's not going to happen this fast, so you will indeed have time to find this setup. But when we're looking at backtesting like this, every candle is an hour and it's happening in half a second. It's pretty difficult to, find the confirmation entries in there. So what can we see then on a low time frame perspective? Well, it looks to me like we've came down, the momentum slowed, then we had a push into this zone, then we had a push up, we failed to break the high, we had a demand zone again, then we finally did break the high. However, there was no confirmation entry given, at least this far. So the entry I'd be interested in for a confirmation would be here. And now because we've had the structure, lower low, lower high, lower low, higher high, we would now be interested in placing an order on around this level. That does not mean it's going to get traded into, and it may be a bust on this move. This is where risk entries can come in handy, because a lot of the time, risk entries are going to work out and give you an entry where the confirmation entries may not. So as you can see, the confirmation entry here did not actually confirm a movement, and the risk entry would have been the only way to really secure this large trade. Now that is actually a good highlight of what we've already spoken about, which is the difference between risk entries and the different pros and cons between risk entries and confirmation entries. Confirmation entries obviously are going to give you higher win rates, but they are going to lead to some missed opportunities, as you can see here. So the best thing that I advise you to do, which is what I advise everyone to do, is to backtest for yourself. Obviously, when we finish these chapters, you're going to hit a backtesting chapter, and that's going to teach you how to backtest for yourself. But when you've been through that, using everything you've learned, what you should then do before you go start trading live is go to the charts and test out all of your different processes that you've learned and test out the whole method that you've learned for yourself, backtesting different things. You need to work out, are risk entries best for you? Are confirmation entries best for you? Are you happy to use a combination of both? How are you going to identify zones? Are you going to use the extreme zones? Are you going to, focus on confirmations in multiple zones, etc., etc., etc.? There's lots of things that you can consider in your testing, which is what is going to be very beneficial for you in the long run because you're learning for yourself using the concepts that I'm teaching you. But anyway, as we can see here then, the entry there was formulated by using a risk entry on the extreme zone, the imbalanced zone, that is, the final one at the bottom of the trend. And as you can see, we wicked in and then we shot up. And in this instance, we did not get a confirmation entry, but in many other instances, we will. And now when you are trading confirmations, the thing is you can always get in a little bit later in the trend. We could obviously look towards potentially this zone here now as the zone that broke structure. And let's just have a look if we do get a pull down into that zone. It's looking like this market is extremely bullish, and for a confirmation perspective, we are probably not going to be getting in on that one. But as you can see, the risk entry worked out very, very well, and this is why I teach both entry types, because they are both very, very good for their own different things. And as you can see, with that nice tight entry, that is a 16-hour trade from that nice formulated setup we spoke about all the way into this random target here. So for formulating entries, that is how we do it. First of all, we want to refine the zones, and then we want to work out where the inefficiencies and where the efficiencies are, which is the best zone to buy from, and then we just want to focus on that zone, okay? So remember, what we spoke about before, refining entries, that is the key to finding the best possible entries for your trades. None of this entering on 4-hour zones. Scale it down to the 1 hour, to the 15-minute, to the 30-minute, as low as you can go to find a high probability and very, very refined, imbalanced zone. That is going to be the zone that brings you the best possible returns and the best possible entry with the best possible stop loss to give you the best possible risk reward. All right. So I hope this video has been beneficial to you. We've obviously only seen the risk entry play out, and that's also kind of a good little lesson there on the difference between confirmation and risk entries. Now, don't take this as a cue to never use a confirmation entry. This is one single setup, remember, in a market that constantly flows with new opportunities every week. So don't disregard confirmation entries just because you've seen this one example, but definitely do consider risk entries, okay? So what we're going to do now is move over to the targets video, and I'm going to show you how to find targets for your trades. And then we're going to go a little bit of a deep dive into the best place to position your stop losses and how you can position your stops to make sure you don't get stopped out, but also make sure you're not stretching them too far and cutting off too much risk reward.